Here's a market update. The money world just got a little bumpy, and it might affect your next real estate move. The U.S. Treasury market is experiencing increased volatility due to a temporary 90 days pause on the global tariffs, except for China. This has triggered some major movements in the bond market and could ripple into the real estate sector. Right now, the big money people like banks and investors are feeling nervous because the US said we pause all taxes on all countries except China. Here's what you need to know. Borrowing money is getting more expensive. The cost of borrowing money for 10 years or 30 years just went up. Liquidity pressure. Over $12 billion in hedge fund positions were liquidated due to margin call. This adds to the sell-off in the Treasury market and shows how tight cash flow is becoming for institutional investors. China's influence. China still holds $1.2 trillion in U.S. debt. If tensions grow due to the exclusion from the tariff pause, there's a risk they could sell off treasuries, putting even more upward pressure on interest rates. Despite the volatility, there's still strong institutional demand for U.S. debt, as shown in recent Treasury auctions. This may help to stabilize the market rate rise too quickly. Now, let's talk about how this impacts real estate, especially in Silicon Valley. When Treasury yields rise, interest rates often follow. Higher rates mean buyers' borrowing powers dropped. A 1% rise in mortgage rates can cut affordability by 10%. Seller may face price pressure, especially if buyers pull back due to financing challenges. Investors reevaluate higher interest rates could slow down cap rate compression and affect the value of income-generating properties. For Silicon Valley, where real estate is already high-priced and highly sensitive to interest rate changes, move-up buyers may pause if financing becomes too expensive. First-time home buyers could be priced out. Cash-rich investors may gain an upper hand and negotiate better deals. Foreign buyers, especially those from China, may shift strategies due to geopolitical tension. What can you do? If you're thinking about buying or selling in Silicon Valley, you need someone who understands all this big money stuff and how it connects to real estate. Hi, I'm Ann. Let's talk. I have helped clients successfully navigate the 2008 housing crisis and many shifting markets since. With 23 years of experience in Silicon Valley real estate, I can help you to create a clear, customized strategy to take advantage of opportunity, even in uncertain times. Call or message me today to schedule your strategy session.